Welcome back to the channel. I'm David Zai, your trusted mortgage professional, here to guide you through the complexities of buying a home. So today we're addressing a hot topic: current interest rates and why you shouldn't let them hold you back from achieving home ownership. Let's address the elephant in the room. Interest rates are higher than they were in 2021, but here's why that shouldn't stop you from buying a home today. So it's really easy to get caught up comparing today's rates to the historically low rates we saw in 2020 and 2021. But let's put things into perspective. The current rates are hovering right around 6 to 7 to 8%, depending on the type of loan and your qualification. But they are still well below the historical averages that we've seen over the last decade. So let's go over some examples. In the 1980s, the average mortgage rates averaged around 12 to 16%. Imagine paying that much interest on a loan. So for a $300,000 home, the monthly principal and interest payment alone would have been well over $3,000. In contrast, today's rates make home ownership far more affordable in comparison. Even in the 90s, rates were typically in the 8 to 9% range. On a $300,000 loan, that's a monthly payment of around $2,400. Compare that to today's rate, right around 6.5%, where the same loan might cost you around $1,896. That's also a significant difference, and it shows you how current interest rates are still quite favorable historically. One of the best strategies for today's market is buy now and refinance later approach. And here's why it works. While you wait for rates to drop, you'll start building equity in your home by paying it down and values increase. Home values continue to appreciate over time, so the sooner you buy, the more wealth you can build over time. The second thing is mortgage rates aren't static. They rise and fall over time. Historically, homeowners refinance their homes every 5 to 7 years, and with many experts predicting rate decreases in 2025, you'll likely have the opportunity to refinance your mortgage into a lower rate later. The third thing to consider is programs like streamlined refinances for FHA and VA loans does make it a lot easier to take advantage of future lower rates without excessive paperwork, additional cost, or appraisals. Here's a real pro tip. Don't let the higher rates today stop you from buying. Remember, you marry the house, but you date the rate. Let's take a deeper dive into some of the key factors that are shaping the home buying process and the home buying landscape in 2025. Understanding these can help you make informed decisions and feel confident in your journey towards home ownership. Interest rates are a big topic right now, and for a good reason. They directly impact your monthly payment and your overall affordability. Here's what you need to know about navigating today's rates in today's market and how the Federal Reserve affects those rates. The Federal Reserve typically meets about 8 times a year to assess economic conditions and adjust monetary policy. Recent meetings have shown the Fed is cautiously optimistic, focusing on stabilizing inflation without overcorrecting it. If inflation continues to decline, many experts do predict rate cuts to begin by mid to late 2025. Interest rates aren't just influenced by domestic factors. Global economic conditions like energy markets and international trade can also impact rates. So keeping an eye on these broader topics and trends can help you anticipate shifts in the mortgage market. Some strategies when it comes to rate shopping: it's really important that you shop. So when shopping for a mortgage, it's critical to compare multiple lenders. Wholesale lenders such as brokers often provide better deals, potentially saving you $8,000 to $11,000 over the life of the loan, compared to retail lenders based on 2021 HMDA data. Using tools like rate comparison sites or working with an experienced mortgage broker who can shop around with hundreds of lenders for you is a real game changer. If you're concerned about locking in a higher interest rate today, remember that refinancing is always an option when the rates drop. Keep in mind that refinancing makes sense when rates fall by at least 1% compared to your current rate, or when programs like VA or FHA streamline refinances offer reduced cost closing opportunities to adjust the terms without ordering an appraisal. It's always important to keep an eye on housing prices because those trends and insights often preface what rates are going to do. While rates grab headlines, home prices are just as important in determining affordability. Here's what's happening in the housing market. Home prices are continuing to show resilience despite the higher borrowing cost. Limited housing inventory and steady demand have kept prices stable and increasing in most markets. According to the National Association of Realtors, NAR, the median home price in 2025 is expected to see moderate growth of around 3 to 5% depending on your region. One of the biggest drivers of rising home prices is the persistent housing shortage. For every home buyer, there are often multiple offers which keep competition strong. This imbalance is unlikely to shift dramatically in the short term, so waiting for prices to drop significantly might not be a viable strategy. New construction is gradually increasing, but builders are prioritizing higher-end homes, leaving an affordability gap for first-time home buyers. If you're in the market for new construction, keep an eye on developments in suburban and emergent areas where prices may be a little more competitive. Not all housing markets are the same. In some of the higher cost areas like California and New York, price growth has really significantly slowed. Meanwhile, markets in the Midwest and South are booming, offering affordability and strong appreciation potential. Researching your specific market is key to understanding what's real estate for your budget. This is what you need to know qualifying for a mortgage in 2025, and it comes with some updates and considerations, so let's break it down. The conforming loan limit for 2025 has increased to $806,500 in most counties, with higher loan limits in high-cost areas. This means you can finance more without needing a jumbo loan, which often comes with stricter requirement, higher rates, and higher cash reserves. Credit scores and credit requirements do vary by different loan types. On a conventional loan, it typically requires a score of 620 or higher, while FHA will allow for scores as low as 580 for the 3.5% down payment program and as low as 500 with 10% down. VA loans are even more flexible, often requiring a minimum of a 500 credit score as long as the borrowers meet other financial qualifications. Debt-to-income ratio is one of those things. Lenders prefer that the debt-to-income ratio, or DTI, is under 43%, but exceptions can be made for borrowers with strong compensating factors, such as maybe higher income, significant savings, or the ability to handle the payment that you're looking for over a long period of time. So knowing your debt-to-income ratio and how to improve it can definitely strengthen your loan application. Down payment is also a big struggle in 2025. One of the biggest barriers to home ownership is down payment, but there are options to make it easier. Conventional loans may require as low as 3%, while FHA only needs 3.5%, and VA loans often require no money down with full entitlement. First-time homebuyers should always explore down payment assistance programs, which can cover a portion of their upfront costs for down payment and closing costs. For first-time homebuyers, programs like Fannie Mae, Freddie Mac, Home Ready, and Home Possible are designed to help first-time homebuyers with lower down payment, competitive rates, and way more flexible guidelines. Many states also offer grants or tax credits for first-time homebuyers, so be sure to explore what's available in your area. Renting versus buying. That's always been a common question in today's market. And whether to rent or buy, let's go ahead and take a closer look at the pros and cons of each option. The current rental trends have shown that rent has steadily climbed, with some markets seeing year-over-year increase of 8% or more. This trend definitely shows no sign of slowing down as demand for rental housing remains strong. When you rent, you're essentially paying for your landlord's mortgage and building zero equity for yourself. In contrast, buying allows you to lock in a fixed monthly payment and build wealth through appreciation and lose through depreciation and principal paydown. However, there are pros and cons to renting versus buying, because home ownership does come with the added cost of home repairs. However, I think that getting that equity outweighs those home repairs and other factors and headaches that come along with it, especially if you plan on owning in the long term or intermediate term. Renting may seem more affordable at first glance, but don't forget about hidden costs like annual rent increases, limited control over your living spaces, or moving expenses. Over time, these can outweigh the perceived savings of renting. Buying a home is a long-term investment that provides stability, tax benefits, and the opportunity to build multi-generational wealth. While the upfront costs are higher, the financial and emotional benefits make it a worthwhile decision for many. Finally, let's discuss the broader economic landscape and how it impacts homebuyers in 2025. The 2024 elections have created some uncertainty in the housing market, but historically, real estate remains a stable investment regardless of the political shifts. Policies aimed at promoting home ownership may create additional opportunities in the coming years. So while inflation has posed challenges recently, it's now in a downward trend. Housing as a tangible asset is an excellent hedge against inflation. So locking in that fixed rate mortgage ensures your housing cost stays predictable even as expenses rise. With low unemployment rates and steady job growth, the economic foundation for homebuyers remains strong. If you're in a stable career, now is a great time to consider purchasing a home. Experts forecast moderate to economic growth for 2025, which should help stabilize the housing market and boost your buyer's confidence. A stronger economy often leads to more opportunities for home ownership. Let's take a look at what the Federal Reserve and the industry experts are forecasting for rates in 2025. The Federal Reserve actually meets about 8 times a year to evaluate economic conditions and adjust monetary policy. In their recent meeting, the Fed has indicated a cautious approach to rate hikes, with a focus on stabilizing inflation. Many analysts believe the Fed may begin easing rates mid to late 2025 if inflation continues to decline. Over the last few years, we've seen rates fluctuate as the Fed battles inflation. However, as inflation trends down and economic growth stabilizes, rate reductions really do become way more likely. History shows that after a period of higher rates, the Fed often follows with gradual decreases to stimulate the economy. So, what does that mean for you as a buyer? If rates drop in 2025, buyers who purchase now will be in a prime position to refinance and reduce their monthly payment. In the meantime, if you're already building equity and taking advantage of rising property values, to recap, with these factors all in mind, here's why real estate in 2025 is still a good option for homeowners and investors. Number one is the steady growth. If you pull up any property on Zillow right now, and you look at the trend of value, yes, there's going to be some increase and decline. Overall trend cyclically, up and down, is going up like a hill. Real estate has always proven to be one of the most reliable long-term investments. Despite rate fluctuations, property values in most markets have continued to show steady appreciation. In fact, according to the National Association of Realtors, the average home price increase has been around 3 to 5% over the past several decades. Number two, supply and demand. One of the key drivers of property appreciation is the imbalance between supply and demand. With continued housing shortages in many areas, home prices are expected to remain stable or rise in 2025. Number three, housing protects against inflation. Owning real estate is one of the best hedges against inflation. While everything else gets more expensive, your fixed rate mortgage payment stays the same and the value of your home increases over time. By buying now, you lock in today's home prices. Waiting for the rates to drop may cost you more in the long run if property values continue to rise. So here are 2 common concerns that are a big deal with consumers in 2025. Number one, what if home prices drop? While no one can predict the housing market with 100% certainty, historical data shows that home prices tend to recover even after short-term dips. So real estate is a long-term investment, and the time in the market often outweighs timing the market. So if you only have short-term aspirations in the housing market, renting or a roommate situation may be the best option. The second concern is, what about affordability? If affordability is a concern, consider exploring loan options like FHA, USDA, or conventional 3% down, or even VA loans with no money down, which can offer way lower down payments and more flexible credit requirements. You can also negotiate for some seller concessions to kind of help cover the closing cost or to buy down the interest rate. So buying a home in 2025 may feel daunting, but with the right strategies, it's an incredible opportunity. By understanding key factors like interest rates, home prices, and mortgage qualifications, you can make informed decisions and take advantage of the current market. To wrap things up, here's why 2025 is still a great time to buy. Interest rates, while higher than 2021, are still below historical averages. Market conditions suggest rates may decrease, allowing for those future refinance opportunities. Property values continue to appreciate, building equity and wealth over time. So don't let today's rates hold you back from achieving the dream of home ownership. With the right strategy and support, you can navigate this market and come out ahead. If you have any questions or need guidance, click on the link in the description to connect with me directly. As always, don't forget to like the video, subscribe, hit the notification bell, and share this video with someone who needs to hear this. I'm David's iMortgage Guy, and I'm out.